listen up, okay? Sometimes I get steamed here. Sometimes the market doesn't know anything. It doesn't seem to care about a company's sales, even if they're great, or their earnings if they're fabulous, because it's so fixated on just one little thing, and it gets it wrong all the time. I want you to think about United Rentals, URI, largest equipment rental company in the world, which makes its money renting out equipment and machinery to various construction firms, industrials, utilities, manufacturers, home builders, government entities. Unfortunately, though, United Rentals also has a business, small business, where they rent equipment to oil companies. And because of that limited oil exposure, with actual exploration and production customers accounting for just 6% of their sales, this stock has been eviscerated in recent months, falling from the highs of $119 in late November to $86 as of today. Now, United Rentals reported last night the company delivered a 12-cent earnings beat off a $2.07 basis, higher than expected revenues. Rental rates up 4.1%, rising utilization rates to boot. Plus, management reiterated its full-year guidance for 2015 at a moment when many people actually thought the numbers would be cut because of this 6%. What happens? After opening up very strong, seemed rational, the stock got slammed, ultimately closing down 1.75%. As management talked about the possible impact of lower oil prices on their conference call this morning, of course, they addressed it. They're honest guys. Even though United Rentals thinks the damage here should be manageable, even though they see it being outweighed by the strength of the rest of the business, especially non-residential construction, even though the company announced a monster $750 million buyback over the next 18 months, all Wall Street seems to care about is this limited division. Has the time to take action appeared? Is this the right entry point? Let's take a closer look with Michael Kneeland. He's the president and CEO of United Rentals, a straight shooter. Hear more about the quarter and where his company is headed. Mr. Kneeland, welcome back to Mad Money.
Great.
Have a seat.
Good seeing you.
First of all, thank you for coming on.
Thanks for having me.
And let me say why this is really important, because you have told our viewers straight the whole way. So I'm going to look in and I'm going to say, is it possible that the decline in the price of oil is going to stimulate so much more business, including non-residential construction, that we may never even know that you have this 6% non-solution in oil and gas?
Absolutely. We do believe that the low price of oil going into the consumer, our economy is 70% consumer-driven. It's a positive effect. It's going to have a positive effect with housing, and that's going to trickle down to multiple industries, including chemicals, which really benefit hugely on the fact that oil prices are low.
Do you think if you had not bought that division, your stock would have been at 150 today?
You know, that's a great question. When I sat here before and I told you about the pump business, if you recall, 6% of their business overlapped into our core business.
Right. It was just it was something you had to do for your core customers. It was not some brand new initiative.
No, but the cross-selling opportunity was enormous. And it was the biggest re-rental item that we had. So the idea was to cross-sell that product line through our broad operations, and that's our goal.
And as it is, I mean, you broke it down to a fine-tooth comb. You did, let's say 15% of the branch's business collateral damage. You took it down lower and lower and lower. You finally said that the potential negative impact, really kind of all in, is just $36 million earnings before interest, taxes, and depreciation. How much is $36 million in the vast scheme of what you do in revenues?
Well, if you think about it, we said that our estimate for next year is $3 billion of EBITDA. So you're talking about 1%, a little over 1%.
All right, so there's two ways I think you could approach it. We could sit here and just talk about how woe was me. Or I saw your debt ratios. I saw how strong they are. I know you have that buyback. Why don't you finish the buyback in the next 3 months or maybe even 3 weeks and come right back into the market because you got the firepower, unlimited firepower.
It's always consideration. But keep in mind, we are going to spend money. We're going to spend about $1.7 billion because we do see the economy working in our favor.
Right. Right. Yeah, well, that's important. Well, hey, you know what we ought to do? We ought to talk about the other 94% of the business. I see non-residential construction architectural buildings kind of off the charts. I'm speaking to a lot of regional bankers. Yep. First time they're seeing high single-digit loan demand. When someone wants to put up that project, they can go buy the equipment and do it, or they can go to you and rent it.
Absolutely.
And which is cheaper?
Rent. Absolutely.
And how about the maintenance once they buy it versus what you do?
Well, they have to not only maintain it, they got to insure it, they got to haul it around. And the efficiency is not there. That's why companies, and when you look at all these bumps in the road,
right,
it plays well into our industry.
Well, okay, so let's be psychological about it. Are we now in a situation where if oil jumps $10, people go buy your stock? You think that's what I was thinking before I came out here?
You know, it's an ongoing debate. I have no clue. We're trying to figure out, only 6% exposure. Why is it driving it? Why is it this buckled? We don't know. I think there's more of a fear factor out there when it is related to oil, whether it's demand or whether it's supply. What's driving the price down?
Right, and that's up to debate. Now, one of the things that I'm trying to think is, where is our country at this moment? I think our country is getting stronger by the day because of this lower energy price. Let's talk about that chemical side of you thinking. There are lots of companies that want to do business here. I keep hearing it. Why? Because our natural resources. Are you getting orders from, say, foreign companies who want to build things here? Are you getting orders in the Southeast from companies that you never did business with before?
Absolutely. We said that before, that we're seeing an investment, offshore investment, coming back to the U.S., not only in chemicals, but also in automotive in a big way. And so we see that continuing to play out.
Would you ever double down on oil and just say, forget you, market, you don't understand. I'm going to take advantage of the bankrupt guys, because there are going to be guys who are going to go bankrupt. You know, I saw Rich Kinder buy $3 billion asset. The company's not going bankrupt that he bought, but it was just, he stole it because he doesn't care what the nitpickers think. Is this a chance to do that?
Well, we're always, very inquisitive about opportunities.
I mean, because you bought a lot of companies.
Yes, our cash flow is there. We'll look at those opportunities. If it makes logical sense, we'll be players in that market.
Did the market know how to handle your stock today?
Well, obviously, I don't think so.
All right, that's what I care about, because you've been right every time I've talked to you. That's Mike Kneeland, President and CEO of United Rentals. You know what? If you have more than, like, say, a 48-minute horizon, you might want to buy some of this stock. After the break, I'll try to make you more money.